Welcome back, folks. You asked for more videos on the 5-minute scalping strategy, so I'm going to introduce to you some more rules to refine the model, okay? And we will continue this series over time where you will learn more, okay? Now, I'm not going to go over the strategy itself. You need to go back and watch the video where I introduce this 5-minute scalping strategy. It's on this playlist. It'll be the first video in the playlist, okay? So we are on a 5-minute chart. We can see we have a displacement, okay, and we are waiting for the market to come back into this inefficiency, okay, and we can see the market comes back into that gap. Now, let's talk about stops, okay. Now, this is going to be your own personal preference, so I'm just going to provide you with some guidance, and you then have to decide how you want to apply this guidance to manage stops, okay. There's two ways that I manage stops, okay. The predominant way is I have a stop above the high, but I want to see a candle closure above that high on the time frame that I am trading. So in this case, I would want to see a 5-minute candle close above that high for me to close that trade at a loss. Okay. The alternate approach is to add 15 to 25 pips above the candle preceding the fair value gap. Okay. So a fair value gap has 3 candles. Okay. Let me make this a little bit bigger. Okay. You've got the first candle. Let me grab an arrow. You got this first candle. Okay. Then you have the middle candle. In between, there's no delivery of price in the opposing end, okay, and then you have the third candle, okay, and your fair value gap is inside. So this is candle 1. So one approach to implement a stop, okay, is to look at candle 1's high and add 15 to 25 pips. 25 pips is probably ideal for gold. It's quite volatile, okay. The alternate method is to apply a stop at this level, but then you need to wait for candle closure above that level. Okay, that's basically the swing high. Okay, so they're the two ways that I like to manage stops. Okay, so once we have displacement, we are only trading in the direction of the displacement. Okay, so we're trading down. Okay, we're waiting for our entry, which is basically when we come back into the fair value gap. So in this case, our entry would be right there at the top of candle 1, where that wick is. Okay, entry right there. Okay, our target is going to be where the retracement started, basically this swing low from where the market pulled back up into the original fair value gap, right? So that would be the target on the way down. As you can see, we hit target, okay? You're targeting 50 pips at a minimum. You can target more, okay? So for example, from the entry down to the swing low, in this case, is over 140 pips, okay? You can target that swing low, but at a minimum, you should be targeting 50 pips, okay? If the distance between entry to the swing low, the target is less than 50 pips, you still want to target 50 pips, but put up break even at 35 pips, okay? That's it. That's the strategy. This is just another example. I'm going to give you a few more tips, okay? When you see this move come back up, where you expect it to come into this last fair value gap for a move down, this is exactly how you want to see that move that's going to come back up. Okay, you do not want to see this consolidation. Okay, so for example, this now invalidates the move back up into this fair value gap for a push down. Okay, that because we've had consolidation down here, that invalidates the setup. In contrast to this, where we don't have a consolidation, we have a pump up, where we have an impulsive move back up to the fair value gap for a move down, okay, and you're targeting the low of that swing, that's it, okay, or 50 pips minimum, okay. If, as I said, the distance between your entry and the swing low is less than 50 pips, still target 50 pips, but once you get past 35 pips in your direction, then you want to put your stops to break even. So I hope that's clear, okay. I've given you another example of the 5-minute scalping strategy. Okay, I've given you some rules around how to manage stops, okay, in case it moves against you. I've also given you some rules around when your setup is confirmed, meaning you get an impulsive move back up into the fair value gap, versus when your setup is invalidated, and that is if you don't get an impulsive move straight back up to the gap, right? Instead, you have some consolidation, right, at the bottom, and then you get the move back up, right? That is invalid. So now that we have this consolidation, even if we're going to move back up to this fair value gap, we are not looking for the 5-minute scalping strategy entry to go back down, simply because we have had this consolidation instead of this impulsive move back up. Okay, hope it helps. You've got to go back and you've got to back test this and study the charts. Go back and also review the video that I posted earlier about this strategy. Okay, and then forward test it. That doesn't mean risk capital. That means watch the markets live on paper, write down where your entry would be, where your targets would be, where your stops would be, where you would set your trade to break even. Hope it helps. I will talk with you in a future video.